Hey guys, Mike here. So happy Friday to everybody. The weekend is here, and boy, did you see the markets recover? Man, didn't care about those earnings. It said, we're good. We're going to go green, baby. And that's how it ended up for the day. I tell you what, we got a lot to cover in this one. And if you look at the SPY, hey, bulls took control. All right, if you see right there, there's that 200 we talked about. And what they do, they ended up pushing us right above it at the end of the day. Got a nice surge. Closed above the 200. Now we get to see if we're going to end up trying to retest and holding it, or do we just keep taking off from here? I'd look for the retest just for the heck of it. We'll see. Remember, we're closed on Monday for Martin Luther King Day, so we won't have a chance to see that. It'll be on Tuesday. And I want you to look at this and keep this in mind. 393 to 399 was the range today, right? Closed at 398.50, so under 399. Now, let me put on my Nostradamus hat. So this was at 9:23 for the market open. And I said to everybody, 391 and 399 will be a perfect range for the market today. That's only about a 2% total range. So we will see how it goes, because obviously this is a very volatile week especially. And so what did I do? Did I look in my crystal ball there? Well, let's see. Let's go back to it. And let's see, did we hit that? Yep. 393 to 399.10 and close at 398.50. Look at that right there. And so did I just guess or something? No. Remember, all this stuff is at your fingertips. Remember, the game within the game, right? This is not a free market, people. And so if you know that right there, and you knew all the other stuff I was telling you coming in, you can pretty much guesstimate, an educated guess. Not always gonna be right on, unless if something crazy happens. That will go outside these ranges, but most time you see us kind of locked in, right? Especially when we're sitting here stretched like we are with these huge rally we've been in, by the way. And so no surprise there at all. No surprise that it even rallied above the 200, because right now bulls are in control, right? Bears are struggling to try to keep this lid on this thing, and some of those bears might be switching sides. I mean, I actually saw one yesterday. It was on Twitter. This guy every day, God, I got exhausted watching, was something bearish. Look at this. We're going to go into depression. All of a sudden, yesterday, like, I bought some stocks. Oh, really? It's like, all right then. That's it. When you start to see bears start to spin, they're folding under that pressure, or they start to see something different. I don't know. I mean, because the economic data they were putting out hadn't changed. And again, though, remember, what can happen? If you're just data dependent, the stock market is not the economy. It just isn't. What happens when they lay us off? Stocks go up. The stock goes up when they lay off 20% of their workforce. Ugh, not good for their growth, right? But it's good for the bottom line. So that's what matters, right? And so, I got to ask a question you put down in the comments. I was thinking about this today when I ran across this article I'm going to show you, and some of the things that JP Morgan said, and even Wendy's came out doing this. When is the last time you can remember, like what year, where the market, like the number one thing that really drove it was fundamentals, like fundamentals of those stocks and those companies? Like what year can you remember that, right? I mean, if you just got in 20, and if you dare say 2020, 2021, come on now, might have to ban you. I'm just kidding, of course, but I'm just curious what year you think, right? And I asked that because I saw this right here. I mean, look at this. This is amazing, the amount of money. And this just came out this week, and it says U.S. corporations are still lining up to buy back their own shares. They bought an estimated, check this out now, $1 trillion of their stock in 2022, and they are lining back up to do it again this year. And if you look, here's JP Morgan today. CFO says bank could do $12 billion of buybacks in 2023. And even Wendy's, they getting in on it too. I guess they serving a lot of burgers. 500 million share buyback program. And if you're new here, please hit that subscribe button. Really appreciate it. And if you're getting anything out of this, please hit the like and think about sharing the video, guys. And the one thing you have to keep in mind with this, remember, this ain't for you. This isn't for me. This is the only people this serves the most, these share buybacks. Mind you, they're doing this is they're laying people off, by the way, because they want to conserve money, right? The only reason they do this, think about it. The game within the game, right? Who is the largest individual shareholders in the company? The founder, the executives, and the board. That's the largest by a country mile. And so buying back those shares, who's it help the most? Does it help you? Does it help me? Does it help Joe Blow over here? Or does it help them the most? It helps them the most, and the former executives who still have all the shares. So yes, that's why they do it. Don't let them pretend any other way why they do that. When they talk about we're doing what's best for the shareholders, yeah, they're doing what's best for them and those hedge funds, not Not you or me, okay? We have pennies compared to what those folks have, all right? They have millions of shares. I mean, so don't even get it twisted when we're talking about that. But I just thought to myself, God, $1 trillion. Always thinking what good could be done with that money. What can you do for your employees with just the inkling of that money? It's amazing. It really is amazing. And I don't think that tax is going to dent it. I mean, these companies are going to continue to buy back shares. Like I said, you got companies that never bought back shares starting to do it now, right? And just imagine, they spent $1 trillion last year. That's like throwing it while the market's going down. Imagine if they didn't spend $1 trillion. Because you know how many shares that is? $1 trillion. I keep doing that, like, my God, $1 trillion. And those shares still got crushed. So imagine if they weren't doing it, like where the market would actually be. Maybe we'd actually finally got a capitulation moment. Who knows, right? And so the other big news is Tesla, right? So Tesla, and you can tell I have no life about this post right here, because it's 11 o'clock on a Thursday night here. I am posting the Discord, like, can anybody confirm this? I couldn't find it, but it came across my desk. And Tesla's cutting prices in the U.S. and in Europe as well. So that pretty much puts them doing it everywhere, right? I mean, and I believe Canada as well. And so now what this does is, by them lowering the numbers, and obviously this was confirmed this morning, that some of these models are going to actually be able to get that $7,500 tax credit, which will be good. And I'm like, wow, that's pretty good, right? But the other thing was, to me, this should be putting a lot of pressure on Ford and GM stock and all the rest of them, because now this was the big thing. Tesla can't be competitive in a certain part of the market because their car is too expensive. Well, now if they're bringing this down, in Canada they're bringing it down, in Europe they're bringing it down, Asian countries they're bringing it down, and so it allows them, to be more competitive, because that was the big thing. One of the guys from the Big Short, who's been shorting Tesla for a long time now, obviously it's paying off recently, but he goes, they don't have a model below 50K, right? And so they can't compete in that market. Well, now they can, and if you understand, this was already put out there about Elon Musk. I'm gonna let you listen to like a 1-minute clip if you hadn't heard this, and pay close attention to where he thinks the economy is right now. He's very clear about this and what the plan is.
The reality is, if we are in a recession, I think we are in a recession, and I think 2023 is going to be quite a serious recession. And it's going to be, in my opinion, comparable to 2009. I don't know if it's going to be a little worse or a little better, but I think it's in my view likely to be comparable. And that means demand for any kind of optional discretionary item, especially if it's a big ticket item, will be lower. And then with the Fed increasing rates, which is really, this is quite unusual. This is like, when you're heading to a recession, you should be reducing the Fed rate, not increasing it. So that amplifies the difficulty. So now you have sort of structural demand, which is obviously going to be lower in a recession, and you amplified the effective cost of a car because they're almost all bought with debt. So now you get a double whammy, is what I'm saying. So then the obvious choice in that scenario is, do you want to grow unit volume, in which case you'll have to adjust prices downward, or do you want to grow at a lower rate or go steady? It's sort of a choice there. My inclination would be to still grow. My bias would be to say, like, okay, let's grow as fast as we can without putting the company at risk, which would mean, in that scenario, profits would be low to negative during a recession, provided the cash position is okay. I think that's still the right move long term.
And so this is something, and this was from December 22nd, I believe it was. And, so he'd already predicted what he was going to do. I don't think people thought he would execute it this fast, but he did, right? And so, there's negatives and positives to it, right? It makes them more competitive, and now more people will be able to afford them if they want to go buy those cars. And but of course, the other one is, what was Tesla always hyped up about? Their margins. So, obviously they're going to be squeezing those quite a bit. And obviously, I think you even heard him saying there that, profit could be zero or negative. You don't know, but he thinks we're in a recession now. right? And the car industry looks like it's in a recession, right? But then, of course, you look at travel, ain't no recession going on there, right? I mean, it ain't happening. And so, yeah, in the car industry, in certain sectors, in the housing industry, that kind of stuff, definitely. And so, don't be surprised. I guess why we shouldn't be surprised it happened. I think it just happened so fast. And you see the stock, how the stock reacted. Boom, gap down, same way it did when they cut from China, bounced right back, right? Just stays, and actually stayed in a chop box all week, same range all week. It would hit down around 117-ish, 116-ish, bounce back up, get around 122, 123. That was the chop box, right? And we'll see where it goes, because why would they hold them in a chop box range? I don't know. Because they got earnings coming up, right? So why not wait to see what's going to happen on earnings, right? Because these discounts, you're not going to see it. That fourth quarter, right, doesn't have these cuts. But what you're looking for is the forward guidance going forward with these cuts there now. What are they projecting, right? And plus, I think they put their Shanghai expansion, whatever it was, on hold and stuff, so people didn't really like that. But if you think you're in a recession, demand's going to be lower, why would you sit there and start producing more? That doesn't make a whole lot of sense. So, what to look at them going forward. But right now, it's almost like that floor has been sitting there until earnings. So we'll see. We'll see what happens. And I gave the members something saying, look at these volume gaps above. If it gets above this, it can go, man. I mean, it's Tesla, right? High beta stock. And so that leads us in, remember, in this country, small businesses may have the most employees. It's not the Amazons and the Googles and all the ones that get the hype. It's basically the small companies, right, with 500 people or less in it. And so that's why it's important to understand what is happening. And some of this backs up what I was saying yesterday, which I'll touch on when it comes to consumer. But if you look, all this data dropped yesterday. And so you look at, small business expected credit conditions, it sucks, right? I mean, no doubt. Because remember, they don't have these hordes of cash like Apple and Google does. They have to run on debt, a lot of debt. And so, yes, the credit conditions, not looking good, especially if they got to refinance or go out and get new, money and stuff to help run the company, especially going to a really bad recession if we don't know what to see. And then, of course, looking at this, small business job openings, hard to fill, and then small business hiring plans, right? So, of course, the jobs to fill is coming down, right? It's getting easier, right? Because, they're actually cutting a lot of openings out there anyway. And then, of course, the hiring plans, well, they don't really have a lot of plans to hire people. Well, of course, in this environment, nobody's expanding the hiring, that's for sure. That's coming down, but it's within normal limits. It's the open positions that's not. All right, and then you got small business compensation. This is the pay that they give out. And then the small business compensation plans. Like, do they plan on trying to keep increasing? Well, the compensation index is coming down now. They're not giving as much away, and I think we've all seen that across the country. And plan to keep increasing. They're kind of just flat. They actually popped up. And it's still above what you consider, to me, a normal average, especially the compensation index part is way up there, right? Like I said, and I'm finna touch base on that, people making more money. And keep that in mind when we talk about this. And that is small business higher prices, and then the small business prices plans, net percentage next 3 months. So are they planning on raising prices again? And basically we're just looking at this prices coming down. And you can see prices are coming down, right? And the plan to keep raising prices as you come right back into the norm. So keeping that in mind, this kind of comes back to what I was talking about yesterday, and I had my board, I put it on there. But when it comes to consumer, I talked about this months ago. I said, people aren't talking about this. What happens with your compensation? Was, for example, let's say what came down? Used car prices came down. Did your work lower your pay? I want you to answer that. Do you know anybody that happened to? When, I don't know, avocados, the price of avocados came down or something. I'm just picking something random. Gasoline. When gasoline dropped off a rock, came way down, right? Did your boss at the work say, okay, gas is down, give us our money back, and they lower your pay? I'm just curious. I hadn't heard anybody that's happened to, right? And I always say, I said, when they hired people at these higher wages and they kept increasing the wages, unless they just walk in one day and shut the company down and start hiring from scratch again, right, into lower wages, then when inflation is dropping, people are able to take home more money, right, which it allows them to prop up this economy even more. It allows them to keep paying towards the credit card. They may not pay it off, but they can pay towards it, right? What else do you have? What do I get every other day? Please take a HELOC out of your home. Use the equity in your home. Refinance. I'm like, I'm not refinancing and tripling my freaking interest rate. You're out your mind. Makes no sense, right? We're sitting on more equity than people have ever sit on like this. Still there, even with prices dropping in houses, still sitting on record amounts of equity. They can pull it if they need to pull it. All right, and I showed you where people were tapping on that. They were taking out more HELOCs and stuff on their homes, right? And so again, what people are looking at, people in certain income brackets, probably 50 to, anywhere from like maybe 75,000 or less is a family household, depending on where you live at, struggling, no doubt, but people above that, and that's why I said when you got listen to these earnings calls, what happened? What did Chipotle CEO said? I told you. He said, we know we priced the lower income folks out of our restaurants, but that's okay because the basically middle class, middle part of the middle class and above have made up for it, so we're fine with it. No guilt on their part. That's just the way it is. And so, I remember I had somebody comments yesterday say, they ain't been to a restaurant in 6 months. It takes a lot of discipline. I'm like, yeah, it does. It does. My wife and I live by simple sayings in life, and one of them is, just because you can don't mean you should. Right? Sure, we can afford to go out every freaking night and go eat if we wanted to, but we sure don't. And you'd be stunned how much you save with a quickness when you ain't eating out. Have you seen it? Because I'm a principle guy. When somebody's ripping me off and I know they're ripping me off, I'm not going back. I'm not going back. I go to the same restaurants. I was paying $30 for this. Now you're going to charge me $55? Come on. Just because you can? Well, you won't see me again. It's the way it is. All right? I'm not going to do that. It's like, I'll put a challenge to you. Those who, and we have friends like this, you probably know people like this. You might be one of them who trade the car in every 1 to 3 years, right? They always have a car payment. The car payment never stops, right? And a car payment, especially now with a 6% interest rate, I can imagine, depending on what you pay for the car, but anywhere from $250 to $600 a month, right? And I'll challenge you, pay that car off. Go 12 months with no car payment, right? And if you do, I'm telling you right now, you will never go back. You will never go back to trading that car in every 2 or 3 years to have that car payment all the time. You will start buying cars and paying off as quick as you can, because when you look at your savings account, your retirement accounts, how fast they grow, when you don't have a car payment, that money's going into savings and into retirement and compounding. If you're investing it properly, you ain't going back. I've talked to people like that in the past, and they've done it. I know when we did it, we never gone back. That's just the way it is, because you're like, man, it adds up fast because it's the second largest payment in your household, right? And so, just food for thought. Put down in the comments if you've done that yourself. Back me up on that, please. But I'm telling you, put it as a challenge. Do it for 2023. See what happens. You'll never go back. I promise you. But anyway, that's my tangent on that. But, again, what did Jamie Dimon say today? Consumer's fine now. Consumer's fine. Again, paychecks solve everything. I don't care if you're working 1, 2, or 6 jobs. As long as those paychecks are rolling in, you can cover your mortgage or your rent, your car payments. You have a way to get back and forth from work, put food on the table so you're not starving, and pay the basic necessities on those credit cards. You can go on for quite a while doing that, let me tell you. And then, of course, if things get bad, that's when it falls off a cliff. But remember, what do we have so far? We have a cushion of jobs, right? We have 1.6 jobs for every one person in this country. We've never had it before. We've never had a worker shortage like this, and you can't fix it. Not like that. It will take a long time to fix it. And I'm doing research right now, and I'll show you one of the biggest problems facing America going forward from here on out, which is going to make our economy struggle, I think. But, I'll let you know when I'm done with the research on that. But so remember, it's not like we're sitting there with one job for every one person. It's like 1.6 for every one person. And so as long as you got that, again, it can keep coming down. The economic activity can keep drop. Don't matter as long as there's still jobs out there. It's just the way it is. We'll see. That's what's happening, though. And so, I don't know. Let me know in the comments what you think, guys. So, appreciate it. I'll end up seeing you guys Sunday. Have a good night. Hit that like, subscribe button if you got anything out of it. See you Sunday.